One thing that I've learned from one of my mentors that are from afar, you get paid in direct proportion to the problem that you're solving.
Absolutely. What's going on, family? Welcome to another episode of the Digital Empire Podcast, where we talk about everything digital investments and entrepreneurship. And like every other episode, we have an amazing guest. A man's about to really kill the game in his industry. And y'all know I really don't like introducing people because I feel like I always feel like they just know something that I don't. And so if I introduce them, they'll probably be able to give more game just from introducing themselves than I could. So can you give them an introduction of you, like what you do, how you serve people, all those great things?
Yeah, absolutely. First of all, I appreciate you for having me on the show. I go by the name of CEO Josh Earl. I am the #1 choice for entrepreneurs that want to start, grow, and scale a business by getting access to high limit business credit and funding that is backed by scientific data. All right. And so what we do is we help clients be able to grow, scale their businesses. And we do it using methods that I've learned over the years just with my background in retail management. So
Got you. So I want to break down something real quick. I know you talked about start, grow, and scale, right? And a lot of people kind of get those things mixed up on what exactly start, grow, and scale mean, because they think grow and scale are the same things, right, and they're not. So can you break down the differences between those three levels?
Yeah, absolutely. That's a great question. So essentially, I think everyone understands what starting a business is. Actually, a lot of people don't understand it, but there's a general understanding of what that means. But when I think about really growing a business, I'm thinking about getting you to like a consistent place of you're maybe doing, $50,000, $60,000 a year. If you're kind of in that area. But then when I think about scaling a business, I think about getting you to $250,000 and above, $250,000 and above per year. And essentially the difference in those is really just the different, the SOPs that you have in line, the different frameworks that you have for your business, the client acquisition, and just those systems that you need to really make your business boom, basically. Absolutely. That's good. So I want to break down something real quick. My people love to know who the person is outside of the business, right? So tell me what was OG Josh like? What was he doing before he was doing this business? So it depends on how far back we go, but I'll say as a brief overview, essentially, before I really got into full-time entrepreneurship, I was, like I said earlier, I was really running corporations, and I was running different stores within companies like Walmart, and really just scaling those businesses. So,
oh wow,
when I'm thinking about scaling, there was a store I went into. It was actually the last store that I was at, and the store was at $80 million a year. But I was unfortunate in some regards because I left another store where I helped the sales grow, and we killed shrink, which is essentially the loss of money, theft and things like that.
Okay.
And I was supposed to get a bonus from that store, but that particular location, I had to get sent from there to another location. And the other location that I went to was at about $80 million a year, but I was able to help get it over to over $100 million a year. And so essentially what I would do is go from different stores and actually just help those stores, function and really implement the processes that Walmart has into place.
Got you. So you're implementing the same strategies that you did then into your business now.
Absolutely.
Got you.
And part of that too is, companies like Walmart, this company does billions of dollars, every few minutes or something, you know what I mean? And so,
every few minutes
as a company. Yeah. It's a global company too. So
golly.
Yeah. They get into the bread, and which was a little bit disappointing when you think about what the payment towards the workers are per store.
Right. It is kind of sad.
It is. It really is. But one thing that I've learned from one of my mentors that are from afar, which is Jim Ron, is that you get paid in direct proportion to the problem that you're solving.
Absolutely.
You know what I'm saying?
And so you give to the marketplace. 100%.
Absolutely. And so if you're upset with what a company is paying you, it's not that that's all that company pays. That's just what the company is paying you because of what they see the value that you bring to the company. So
that's powerful.
Yeah, it is, man. And when you realize it is even more powerful, because now that you know it, you're able to implement things to build yourself up to get you into a better position to get a bigger bag. So, and just real quick, within the different stores, they all run as an individual business. So Walmart is a big company, right? But each individual store is run by that manager. And so that's why you see sometimes you go to one store and the merchandising is one way and you go to another and it's different. Is because the manager essentially has the last say so in how that store operates.
Got you. So it's very similar to like federal government, and then like you having individual states.
Absolutely. Yeah.
Okay. Got you. So like if we had to guess, I don't know if I've ever researched this, but you've been in this space. You may know. What do you think the corporate entity is of Walmart?
Man, that is a fantastic question. I guess I would probably say C Corp, I guess.
That's what I was thinking too in my head. I was thinking C Corp. I was literally thinking, I was like, man, because they got shares.
Yeah.
So they're a publicly traded company, and the only one that can do that is a C Corp.
Yep.
But I was like, they may know something we don't.
Yeah.
Or like they may be moving some way that we don't know that they move in. I was watching this video, and it showed that I think it was Beyonce and LeBron. They had opened a LLC.
Yeah.
And they had and they were the owner of the LLC was like a trust. And so I was thinking, I was like, dang, but like they're not at a Walmart level though.
Right.
So that's why I was like, dang, what would be like a Walmart? Like what would
that's
they
a good
be doing?
question. Yo, I'm gonna look into that.
I feel like
that is a great question.
It just hit me just now. I was like, man, he would probably.
I never looked into it, bro.
Dang, like
that's a good question.
That's something that anyone could do. If let's say it is a C corp, then it's relatable to a regular individual.
Yep.
Be like, oh well, then maybe I should go into that structure if it makes sense. Right. So
yeah, that's good, man.
You know what I mean? So I feel like that was something that just came across my mind. I was like, dang, Walmart probably is. I'm like, wait, but are they do they have partners? I was thinking a lot of different things as you were talking about Walmart, but it was just crazy. But yeah, go ahead.
No, I was gonna say you don't realize it, but and you guys hear it here first, but. Yo, I'm gonna adopt that as a content strategy for me to look into like some of the bigger corporations and just look at what it is that they do and break it down so that it's relatable to
That's
smaller
actually a great
businesses.
idea.
Yeah, I love that, man, because I already use a lot of the strategies that we've used in the company to grow my businesses and my client businesses. So I think it's beautiful what you just said is brilliant because it takes it a step further, and that's a content strategy that I could utilize. So thank you, I appreciate that.
Yeah, take it and run with it. Shoot, that's what these are for. You know what I'm saying?
Yeah.
I feel like that's a great way. You do that, people will then view these businesses a bit differently.
Yeah.
Because they'll be able to be like, oh, I can move like they're moving, or they, they can start. There's this YouTuber, and he comes out with great content. He talks about like the different families. He talked about how McDonald's became McDonald's, how Rockefellers became Rockefellers. I'll show you off camera. But like, there's this like he talks about it in so much detail on how Rockefeller became like he was born poor, and how he became the richest family in at the time in the world. Probably still, if we're gonna be honest.
Crazy, bro.
It's probably still because they're like 7 generations and they're still worth tens of billions of dollars. So. I mean, it's just crazy how, but he made it relatable.
Yeah.
Do you know what I'm saying? Like that was the key thing, is that he made something like so big, so relatable to an average individual, and I feel like that's like something that that content strategy will probably be fire.
I love that, bro.
That'd be fire.
I love that. And I'll say too, I think the reason why I think that's so brilliant is because like when it comes to structuring, I don't know how they structure, but I know one of the things that Walmart does is, like I said, they have they have a network of stores and they allow it to be run by the individual, right? The leadership in that store. And then one of the things that they do too is that I know that they have a wealth plate that they use where they put life insurance on all of their employees.
Yeah.
Everyone has a life insurance policy.
Wait. They have a life insurance policy on all their employees. If anything happens, it goes back to them.
It goes back to them, yeah.
Wow.
Yo, if you look into it, there's people who they didn't have enough money to get insurance for their family, and their family member died. While maybe not at the store, but while being an employee at Walmart.
Right.
And so that person tried to sue Walmart for money because they found out about these insurance policies that Walmart has on on the employees. Yep.
That's crazy.
Yep.
That's actually genius.
Yeah, it is,
that's
bro.
That's actually genius. That's a killer.
Yeah.
They're making so much bread outside of just the income that they make from Walmart.
Absolutely.
They're making a family bank out the gate. I know you ain't just asked a question out here in these streets. What's up?
So, one, did the employees know that they were signing documents that they were getting life insurance on them? And was it a key man insurance policy that they actually signed? Because remember, a key man insurance is when somebody dies, they can use that money to replace the next employee.
Yeah, yeah.
That's what it is. So that's what I wanted to.
Yeah, that was actually a great question and a great point. And I know I love that you asked that. I don't have an answer, unfortunately, you know,
right,
but
that's research for
yeah,
sure.
but I love that though, because even like the key man insurance, I know a lot of like entrepreneurs, business owners have that themselves, but that probably is what Walmart has. And no, I don't think I didn't know that they had me sign a documentation to say that I know that I'm getting insurance put on me. But, you know, a lot of times I don't think you necessarily have to have the individual sign the agreement to it.
There should be a level of disclosure.
Yeah.
There should be a level of disclosure. You're putting a policy on me. That's the same way that they're doing when we don't know that they have a SecUV trust on us. So it's the same concept. So are you putting a policy on me and you didn't tell me? And who's the beneficiary? My family's not the beneficiary.
Yeah.
So that's the reason why I was asking, is there something within the policies and procedures when they're signing in the HR department, the state is somewhere, and they don't, because people don't read.
Right, yeah.
That's absolutely what it is.
Yep, that's a fact.
The lack of reading,
So
for sure.
one of those documents, it could be that fine line that says, hey, we at Walmart, on each, and once you decide to become an employee, we also put insurance on you, whether it's a term insurance or whatever the case may be, or a whole life, and they don't even know, but they were right to sue them.
Yeah.
Absolutely.
And here they can't survive, but yet you're getting paid off of our family members.
And I don't think the person won.
I believe it. I mean, you're going with you're suing an entire $1 billion company, and they have way more resources than you. There's no way that they're going to win. They don't have the same resources.
Yep.
It's just not the same.
They would have to do a boycott, or it would have to be all the employees.
Yeah.
Yo, that's a wrap.
Yeah, no, they would lose money at that point. But they're never going to do that.
Yo, there's so much propaganda. I'm telling you, like, Walmart literally has like teams dedicated to prevent any kind of like boycotting, any type of unionizing. Yo, there's so much propaganda. Like, they spend, it has to be, I would say with a B, they spend billions of dollars a year to eradicate any type of like notion or ideology inside of a person's head to think that, yo, let's get together and let's create a rising up. And to be honest, I think that's one of the issues that I had within that company too, is because like I understand people, and I managed maybe 400 associates and managers. I was a co-manager, so I ran like the whole store. And I had assistant managers under me. I had department managers, like just a lot of different managers that worked under me, and associates. And I would probably say out of the 400 people that worked under me, it was probably maybe 40 at most. I don't even think it's that many. Maybe 20 that just they did not like me. But think about that. Out of 400 people, maybe 20 people didn't like me. So that means I had a lot of buy-in into all the associates, all the managers, right? And so when they fired me, and they did it unjustly, and I tried to overturn it, it just never happened. No one really paid attention. But there was an assistant manager that I hired her as a seasonal associate. I mentored her and everything else, and she ended up becoming getting promoted. She was so upset when I got terminated that she was vocal about it, and that's one of the things I love about her. But the store manager said he gave her a negative ding on her annual review. And the reason is because he said that she doesn't know how to. He said something like she doesn't know how to move past traumatic experiences that she disagree with, and it's because she was so vocal. And so I had a lot of associates that bought into me, and so like. You may say to them, hey, I need you to come and do X, Y, and Z on your day off, and they're not going to come. Right. I'll hit them up like, yo, I need you. They'll stop what they're doing and they'll come and work for me. Right. But it's because I understood it's a culture. And exactly. They know that I'm going to have their back just like they have my back. And if they do wrong, I'm going to hold them accountable. So it wasn't favoritism, but it's just that they bought into me. And I think that, that's not good for a person to have that kind of influence on so many people inside of a store.
Let me ask you this. What about in your business?
Yeah, it's the same.
So you wouldn't want a sole person. Let's say you have 100 people under you. Right. And you have like different departments. You have department heads in each one of them. You wouldn't want someone so bought into that particular person, even though it's a culture thing? Well,
if I hired the person and the person is doing right by my team, I wouldn't mind it, because how I see it is that first of all, you're not, if you're that person, you're not going to support my people more than I do. And so even if I'm supporting them, so if they're able to get that from you too, it just creates a better work environment, in my opinion.
Right.
You know, I just recently joined some different credit communities, and essentially I did it because I want to go in those communities and provide so much value that people cannot deny wanting to connect with me. And I was talking about it at this event that we were at the other day, and they were like, yo, but you don't think that the manager or the owner of that community is going to have a problem with it?
Right.
I said, well, if they do, that just tells me they care more about themselves than they do about their community. Right. So one of the things that I love about David Shands is that in his community, he pushed everybody to come in and add value to his community. Yeah. And he encourages those people in his community to tap in with the people that he's bringing to him. So if a person has that insecurity, then that's a them problem. Right. But I wouldn't mind having that inside of my business.
Got you. That makes sense. I wanna tap into something real quick, because you said something that was like really, really important. You said that you want to make sure that someone within your community or within your employees get that same culture. So like you said leadership, and it just so like, how would a person be able to build leadership within their household, within their business, within their, like, how does a person start off with leadership?
I think the way that you start off with leadership is through being transparent, right? And being somewhat vulnerable. And I love the fact that you said even in a household, because I believe that leadership is a transferable quality, right? Yeah. And so a lot of the people who I know that are great leaders, they do it from a place of empathy, right? And so, you know, I could have lied earlier and given an answer to a question that I just really don't know the answer to. But I'm transparent enough to let people know, like, yo, I don't know, but I can get you an answer. And so I think if people will, first of all, develop themselves and become the person that's worthy to have people to follow them, become the person who is the leader, then just naturally people will follow you. And, you know, when you can be vulnerable about what you know and don't know, but still have the sense to say, okay, well, I'll give you an answer to that, and just realize that it's a two-way street, right? And so I take ownership of everything. So the people that work under me who mess up, when it comes to my supervisors, or, you know, when it comes to even in my household, like when I mess up, I apologize to my kids. Yo, I was wrong. I made a mistake, right? And so just being able to move past that.
Absolutely. And so let's say, because a lot of people in my audience are like, man, I'm in 9 to 5 right now. I want to be able to get to the point where I can work full time as an entrepreneur and build that leadership skill. Like, if you could give like a step by step, what would be your way of transitioning someone from like a 9 to 5 to becoming full-time entrepreneur?
So I would say that step one is become a full-time entrepreneur before you leave your 9 to 5. And, you know, the problem with people is that they think when they leave their business and become their job and become a business owner, at that moment they need to be a business owner. But what they don't realize is that if you become a business owner before you leave your 9 to 5, then when you get into your business, it's easy, because again, a lot of skills are transferable. Yeah. And so when people go to work, when you go to your 9 to 5, you need to look at it as though I'm going to meet with an investor for my business. And what that's going to do is that's going to give you a different mindset and a different attitude about the job that you're in. I started this off earlier by saying that a lot of the same frameworks, the same structures and systems that I utilize in my business and in my client's business, they're things that I took from Walmart. You know what I'm saying? So
give me an example. Yes. Give me an example. Like, what are some like Walmart things that people can use within their business today?
So one of the things is it's called like a store within a store, right? And so essentially, if you think about Walmart is a really big store, supercenters, right? Right. But when you go into electronics is set up specifically for the electronics department, right? And that even though it's inside of one store, you're going to go over to hardware and it's going to be different than electronics. Right. So one of the things with the store within a store method is that when you are able to have your business set up so that you may have like a lot of people want to have multiple income streams, right? But with the store within a store method, what you're doing is, me as a business funding strategist, the store within my store is being able to offer business credit repair. Does that make sense? Yes. Because if I'm going to get you access to high limit business funding, I might need to help you fix your credit first. Absolutely. And so they all tie into each other. That's the store within the store method. You don't have to have 7 different random streams of income. That's the worst thing you can do. You need one stream of income, and from that stream of income, it needs to break off into different, different streams. I was just
about to ask you that question too.
Yeah.
Like, do you believe in multiple streams of income? But you just answered that.
Yep.
You believe in one that has
absolutely
multiple streams, and that's a mindset shift that a lot of people have. I was doing sales calls, and I always hear, I want multiple streams of income. In my head, I'm like, and at this moment, it's not appropriate for me to tell you need one stream of income, because that's not what they're here to listen to. But it's just more of like, man, it's just like you need to have a mental shift in your head to know that.
So, a lot of people, you might hear people talking about, connect with ADP. And then once they connect with ADP, they'll tell you that you can use ADP to hook it up with Plastique, and then be able to go and now pay yourself your salary or your paycheck stub. You can paycheck based off of using a credit card by hooking it up to Plastique, but it's actually old information. And the problem with that is a lot of people, they just regurgitate things that they've heard other people say. And so the way to do that now is not through Plastique, but it's actually through a company called Zelle Money. And so if you hook up your ADP, for example, with Zelle Money, they're like Plastique, where they let you pay stuff with your credit card that you normally couldn't pay. But now Zelle Money is the way that you go and actually pay yourself from your credit card to get those reports. It's not through Plastique, but they're really similar companies.
So they can't do it through Plastique.
No, you can't do it at all.
You can only do it
only through Zelle Money.
Understood. Now, this is the question that I have. Do you think a person should have income first before establishing credit, or income after establishing credit?
Bro, I think you need to get credit regardless of what kind of income you have coming in. And the reason why I say that is because you really can utilize your credit to create income for you. But it goes back to being responsible about, if you know that you don't have anything really coming in, then I wouldn't recommend you use any credit, honestly. What I would do is I would recommend you build up like vendor accounts.
Okay.
Right? Because instead of you having a subscription, what you do is you dictate when you buy something, and you dictate, because like if I have money coming in the next 14 days, 30 days, then if I use like a vendor account, then I'm able to control that payment instead of it being the same payment every single month.
Now, we saying vendors as in net 30s,
Correct.
net 60s, net 90s?
Yep.
Okay, got it.
And some of them are net 7s too. And the only reason why I mentioned that is because like companies like A to B, for example.
Yeah.
Like a lot of the gas cards, you only have a week to pay them joints off. And there's people who don't know that. And I've had people
That's
that
something they got to pay attention to for sure.
Absolutely, bro,
You gotta
because
pay attention to those.
they get them in a bad position.
It's terrible. I'm telling you from personal experience.
Yeah, me too.
Terrible position.
Me too.
For sure. So when it comes to, let's say, because this is good, because like I said, a lot of people don't know how to manage their money in that type of way. And that's super important to break down the statement date, due date. Got to know the difference between the two, because you got to allow it to report on the statement date. Right. So if, let's say, I'm going to give you an example. Let's say a real life example. Someone has $2,000 in credit, right? Credit card, right? They're working a 9 to 5.
Okay.
They want to be able to, get that $300,000. Of course, let's say they don't know that it's going to be $300,000, but they want more.
Right. Gotcha.
Right. They make about, an average person makes about $3,000 a year. I'm sorry, a month. Not a year.
Okay.
That'd be crazy if it's a year.
That would definitely be crazy. For sure.
$3,000 a month, right? That'd be wild. Like, what would you suggest, like, steps in them being able to, let's say, acquire $10,000 of funding, something a bit more reasonable, right? And of course, if they can get 10, then they can duplicate it from there. But like, what would you say the first steps for them to do? Let's say the credit score, I give you all the information. The credit score is maybe, let's say 620, probably like an average of what usual people are around 620. And they got 10 inquiries and student loans.
Okay. Yeah. So what I would say is that there's ways in which they can take that money and still get build their credit up. And one of the things that they can do is they can go to their local bank, and they can, like, for example, if you're with Navy Federal, you could do a pledge loan, and you're able to build up an additional trade line, a primary trade line, by doing that. And what it does is it shows that you have a primary trade line, and it shows that you're able to properly manage that new credit that you have. There's also companies like Magnum by Credit Strong that they're going to give you like like trade lines that are reporting, and there's just the regular Credit Strong where they're more of a savings account. Basically, what I'm saying is like there's a lot of different credit builders that you can use that are going to give you a primary trade line, and you're able to use that as a way to kind of over, maybe 90 days build up some type of like improvement to your credit.
Correct.
And you don't really, however many inquiries you have, it doesn't really matter.
Really? That's new information.
Yeah. With those accounts.
Okay, with those.
Yeah,
not
with those
like
accounts.
in general.
Not in general.
I was about to say, I definitely thought it was like 2, 3, max 4 inquiries that you really want to stay in.
It is. And what I would say with that is, like, let's say I was to look at their credit report, I would look to see which of these inquiries are actually tied to an open account.
Got you.
Right.
Yeah.
And if it's an inquiry that's not tied to an open account, we're just going to get it removed.
Makes sense.
And so, we would do that, and that's going to lower the inquiries depending on how many accounts they have open. Typically a lot of the inquiries, if people have that many inquiries, most of them are going to be tied to an account that's not open. And they're just, ignorantly just applying for stuff because they don't understand the strategies behind it. And so we would get those all removed. And let's say that gets you down to, even if it's 5 inquiries, which still can be considered high.
Yeah.
There's some places like Upstart, for example, where you're able to get a high interest loan. And so if you're able to get like maybe $5,000 from Upstart, it's going to be high interest.
Right.
But if you can take that and you're able to take it and go and open an account with like, Bank of America, right? And you deposit that money that you get from Upstart inside of that Bank of America account, and you wait 90 days, and they see that you have money that's sitting in there is going to help your bank rating for one. But then what you can do is you can do a pre-qualification and see if they're able to approve you, because now you have a relationship with them. And then let's say you're able to get $2,000 from them. You just take the high interest that you had, and you can pay off that high interest loan that you got using a loan that you got from Bank of America.
After sitting for 90 days?
Yeah. Because, it takes about 90 days for them to be able to build up a bank rating score.
Okay, so let me make sure I have an understanding. I get that part. We're letting it sit there. We're letting it build relationship. He's getting the score, which we'll talk about that in a second. But for 90 days, of course, within those 90 days, I'm guessing we're paying off the minimum balance.
Correct.
Okay, cool. Just want to make sure that
they
are aware that they're not just there negatively sitting there and gathering 90 days of late payments.
Yeah, I'm glad you said that. Absolutely.
You know what I'm saying? Okay, so a lot of people actually aren't aware. Bank ratings is actually not something that most people are aware of. So like, what would you say a bank rating score? Like, what is that?
So the way that you get a bank rating score, it depends on your average daily balance, right? So whatever amount of money you have sitting inside of your account over the course of the 90 days, because banks, they work in 90-day cycles, they're going to take that amount of money that you have, and they're going to utilize that as a way to determine what your average daily balance is. And based off of that, that's how you get a bank rating score. And so I can't think of the exact amounts off the top of my head right now, but there's different tiers. So from 0 to like 3,000, there's a tier, lowest tier, obviously. And then I think from like maybe 3,100 up to like 5,000 is another tier. And it just goes up and up. And based off of the bank rating that you have, based off of that tier, that's something that also dictates the limits that you're going to get on your credit.
That's game.
Yeah.
I did not know that.
Yeah. So that's why taking that loan and sitting it into that account, and I would like just maybe do a couple of transactions.
Right, for it to just not be completely
absolutely
bare. Yeah.
And then what that does is it boosts your bank rating. And so then now I'm boosting my bank rating. I'm creating a relationship with these people, and they see that I'm able to manage my money. And so when I go and request a credit card, or if I just happen to go into the branch one day and have a conversation and they ask me, do I want a credit card? Yeah, of course. Because now we have a relationship. And
absolutely.
What I would tell people too is that if you're going to do that, you need to look and research banks, because you need to see what banks have the different rewards that they're offering you for opening an account. Because, bro, 1 year I made a decent sized bag by just using that same strategy and going from, like, I went to Truist, I went to Chase, I went to Bank of America. There's a few different banks that I utilize, but they're giving you, some of them, $1,000 if you open up an account with them, and you keep it for like 90 days, and a couple of them are like 6 months though. Right. And you have qualifying transactions. So you just need to do your research to figure out
what exactly that means.
Yeah, because what happened to me with one bank, with Truist, is they came back and was like, yo, you didn't have enough qualifying transactions. And I was like, I just had bread sitting in this account for nothing.
For literally no reason.
Yeah.
That's valid. So yeah, y'all definitely got to do y'all research
Yeah.
for sure. Now you said something before about with Zil that they can pretty much pay themselves through that
Right.
way. Now I'm gonna connect this to an entity because with S corps, that's kind of like when you would want to do
Absolutely.
that. And a lot of people get that mistaken of, we can do this while we're in an LLC, which you can, but then
Yeah.
you're still getting double tax.
Absolutely.
Right?
Yep.
So would you still suggest would you suggest the Zil play when they are an S corp, or would you still suggest that even if they have an LLC?
I'm going to answer it two ways, and I'll
Okay.
tell you why. Let me say this first because I didn't want to not say it. But you guys need to be careful when it comes to opening these different bank accounts. I just needed to say this disclaimer.
Oh yeah, for sure.
Because there's something called check systems, and if you open too many bank accounts up, they're going to flag you. And I just needed to add that because I know people they'll just run a play.
And they don't even know what check systems is.
And they don't even know what check system is, but and I can go into that, but I want to I definitely want to tap into your other question. I think it was a great question. But, essentially you can get check systems because if you open, I think it's like 5 or 6 accounts. If you open too many accounts too fast, you're going to get flagged. And it's going to make it look like you're like either you are a victim of fraud or you are committing fraud yourself. And you're going to go through the process of having to get removed from check systems, in which I have content online about that too. But you just don't want to put yourself in a situation where you create an unnecessary obstacle. So I would say do not apply to any more than maybe at most 4 banks within that 90-day period. And if you want to do more, then just do it after you've run that entire play over that 90-day period. Because again, just if you apply to too many banks, it's really gonna put you in a bad position. So I would feel irresponsible if I didn't add that.
Because then they'll just go to 20 different banks.
Yep, exactly.
1000%.
So I just needed to add that disclaimer. Oh, I'm so sorry. What was your other question though?
Oh yeah, I was saying that with the Zil situation, right?
Okay, yeah.
Knowing that usually when you're paying yourself as an employee, you
Right.
want to have an S corp. Would you suggest them to do it? Because LLC is a huge thing.
Absolutely.
So would you suggest them to do that Zil play only during an S corp, or would you still have them do it during an LLC?
Okay, yeah. So ideally, you guys want to do it as an S corp. Okay, and the reason why I say ideally is because, to your point, if you are making under, I say $50,000, then you really don't need to be an S corp.
Say more than that.
What would you say it is?
I say at least 200. Yeah, I mean, like think about it. Like when you're paying yourself, it got to be for me.
Yeah.
I got to be able to live off the income. I just feel like it just doesn't make sense if I'm making 50,000, I'm only paying myself, let's say like 10.
No, I agree.
It just doesn't make sense financially to me.
No, I agree
would
100%.
say 200,000. 50,000 is legally, for speaking like tax code
Right,
purposes,
yeah, and that's what all I'm
50,000
talking about.
Yeah,
Yep.
50,000 is, but I
Yep.
think 200,000 is probably a healthier number.
Yeah, I think if you're able to pay yourself, because technically, if you're making if you're making 50,000 for tax purposes, yeah, but I mean, you're not really going to be able to pay yourself a reasonable salary.
I wouldn't even say that. There's nothing there that's reasonable.
Yeah, because I mean, you got taxes, you got you're going to have to pay taxes on what you're making, taxes on what you're paying yourself, and so
self-employment taxes,
It's
personal taxes.
Yep.
I mean, it just doesn't make sense. I mean, and you're not even talking expenses, and then now I got to pay myself.
Yeah, I think as far as if you're really structuring everything perfect, and it's not just for the tax reasons, then yeah, I agree 100%.
Yeah.
But there's a lot of conversation online where people are just start. I have mad clients that'll say, "I want to start my business as an S corp," but they have no income coming in.
It makes no sense.
And so that's what I'm saying. Like, if you want to get the tax benefits, then I would say at least at 50,000. But ideally, I agree. It's definitely best that if you're closer to 200, because at least then you have money to really pay yourself
1,000%,
so that you can actually live. So, but yeah. So and the reason why I answered it that way earlier is because there's a couple situations, and I'll do my best not to drag this out, but there's people who, when you scroll on social media, I know you've heard it. No doc loan, no doc loan, no doc loan.
Oh yeah, the 49,997, I think. It is.
But see, here's what people not telling you. This is what they're not telling you guys. Now, when it comes to no doc loans, these companies, they're really crafty in how they get these documentations, right? So there's a company that I said it on another podcast. I don't want to say the name, but I'll say it. They're Discover, right? It was Discover, and what they did was, I put down that I get paid $200,000 a year. And again, this is a no doc loan play, right? But I put that I make $200,000 a year in my W-2. What Discover did was they gave me a credit card. I think it was $10,000 or something like that. And maybe 2 months later, they came back and they said, hey, Josh, we need you to verify your identity.
I knew. I was like, no way they just give you $10,000.
Yep. 2 months though. They said,
I wasn't gapped. I was like, in my head, I'm like, they didn't ask to verify nothing.
Yeah, bro. They made a joint, and I was spending it. You know what I'm saying? And because they had, I think, like a 5% like cash back or something like that.
I would have abused it for sure.
I was running that joint up, bro. You know what I'm saying? And I think that's probably one of the reasons why they were like, yo, this guy's like using this card. I was using that joint for everything. I normally use my Amex Gold card, but I was wearing that Discover card out. I mean,
when you got cash back, 5%,
bro. So I was actually going to Texas. Me and Shans were going to Texas. Him and Vanessa's only reaching unemployment.
Jonathan, yeah,
they were doing a podcast challenge out there. And so me and Shans were actually going to the airport, and I get a call from Discover, and well, let me back up. I had already sent them what they needed. They said they needed my driver's license and a selfie.
Right.
Ironically enough, I was traveling then, and so I pulled over. I went into a store, and I took a picture, and I took, sent everything that they needed. Bro, they unlocked my card, right? So what ended up happening was, fast forward back to what I was saying about Texas. Me and Shans are going to Texas, and I think I got to the airport. They locked my joint again.
Dang.
They locked it again, and so I reached out to them. I was like, hey, my card's not working. They was like, yeah, we locked it because we need to verify your identity. I said, yo, you just verified my identity, bro. What are you talking about?
I knew they were going to do that.
So what they did was they said, yeah, we just verified it, but we have to verify it again. And so I said, okay, what you need me to see another selfie? No, you know what they needed? Tax statements.
I knew it. I was like, there's no way they're giving you put 200,000 because I think like the limit,
right,
unquote, I think it's like 110. Like
yeah.
That. And so like they're like 200,000. When they said, oh, they just gave me a 10,000, I'm like, with no verification at all.
Yeah, bro.
Am I tripping right now?
No. That shows that you know it though, because they were like, that's what I'm saying is that these companies, they're not stupid.
No.
These banks aren't stupid. They're not in the business of losing money. They're in the business of making money. And so they lend money to us as a business model. Yep. You know what I'm saying? And so when I hear people talk about no doc loans, I know that, they maybe don't have the experience that I have in that regard. And so they can't speak to it like I'm speaking to it because they've never seen that.
Yeah.
And so what I had to do was, Discover told me, they said, okay, if you want to, the way we need to verify your identity is through your tax statements. And bro, I have a lot of clients. And so in my mind, I'm like, okay, this is an opportunity for me to get data points. So I told him, I said, yeah, bro, I take every opportunity to get data points that I can. And I said to them, I said, well, okay, I understand. I said, I just gave you guys my driver's license and selfies and everything else.
Documenting that, be like, this is what you need.
Absolutely. So what they said was, they said, okay, now we need you to send your tax statements in. And I said, well, I haven't filed my taxes in the last 3 years. So how can I verify in a different way? And the lady told me, she said, well, what we can have you do is we can have you go to your bank that you get your paycheck stub to, because again, you guys remember, I didn't put down you never put down on the application that you're the business owner.
Absolutely.
Yeah, you always put down a job,
You're always employed to something.
You always have a job. And so I put down that I'm the CEO. And so
dang.
Yeah, but see that justified the $200,000 salary.
Okay.
Yeah, because you need to pay yourself a salary that's in alignment with what
with your positioning.
Absolutely. And so what happened was, she said, well, what you can do is go to your bank. You can have your bank, right? I can't do it. I have to go to the bank. The bank has to pull my statement. The bank has to notarize it, and the bank has to send it to them.
Oh, that's a process.
Yeah, it's a process. So I can't. The only involvement I have is going to the bank and telling them to do it. And so that's how they verify what you're reporting through payment, because I've had people reach out to me and be like, yo, can you give me some fake paycheck stubs? Bro, I'm not giving you no fake paycheck stubs.
Ain't no way. I mean, that's so outdated now.
Yeah, I'm not doing that.
They're smart now.
Yeah,
they're not doing that.
Not doing
and
it.
It's not risk. I'm not risking my freedom over some pay stubs. I'm not.
And I have business partners that are a lot bigger than I am. And, if they found out I was doing something like that, that would destroy my network.
Yeah, your reputation
Yeah,
is
reputation,
important.
absolutely. So
Especially in the credit space.
it's because there's so many scammers out here.
Exactly.
You know what I'm saying? And so, but here's what I did, and this is why we're talking about the whole paying yourself thing. And I'm glad that you brought that up. So what I did was, I'm trying to make sure I don't leave anything out. So I didn't want to go through the process of the taxes. I didn't want to go through the whole bank thing. And again, I'm traveling, right? So she said, well, what we can do, because I told her, I said, that's going to take too much time. I'm traveling. I need access to my money. She said, what we can do is we can send you a link. Excuse me. She said, we can send you a link. And when you get the link, I need you to click on it. And I need you to give us access to look at your data. And so I'm like, interesting. Okay. I get the link and I click on it and I'm reading through it. And have you ever heard of the work number?
No.
I'm glad I asked that. Yo,
I've not heard that before.
99, I've literally, and I'm only saying 99% of people, but it's because I can't ever remember a person telling me they've heard of it.
No.
So the worknumber.com, what it does is.
That's a website?
Yeah, it's a website. Yep. So the worknumber.com. So if you go to the worknumber.com, you're going to see every job that you've worked over your entire life.
What?
Bro, not only are you going to see every job that you work, you're going to see how often you get paid. So if they pay you, like, let's say like you got paid every 2 weeks, you're going to see how much you get. They're going to see how much you get paid. They're going to see how often you get paid. Yep. They're going to see all of that information.
That's crazy.
So when I
wait, hold on. Let's finish the sentence. Then we got you.
So I love this. I really do. When I looked at what they were talking about, me giving them access to, I was already familiar with the worknumber.com, and I can tell you about the story as to why later. But so I was like, oh, I see what they're doing.
That is.
They're looking their payments
based on
the history, and so they tell you no doc loans, but they want documentation. And so I'm gonna tell you, this is why this is why I answered the question about paying yourself this way. So because I pay myself in my business, they were able to look at my work number. First of all, I looked at it. I gotta see what's on that joint myself first. You know what I'm saying?
Nah, for real.
I looked at it first and I saw, legit. So it shows my payments.
Yeah, I'm gonna look at that when I'm hopping off here for sure.
They were able to verify that, that I'm paying that I make. Well, I think I changed how much I paid myself because I reported to them $200,000, but then when I was paying all the taxes on that, I was like, bro, that's too much money. So I was like, let me take it down to 100. And I think I did it at like 110.
Yeah.
Because that's when I started reporting to 110. And 100%. So they were able to see, okay, well, he's not doing 200,000, but they could see where I was trending for that. And then they saw where I actually, sorry about that.
You good?
They could see that I was actually trending for that. And then they were able to see where I actually started to now I'm making like 110. So they unlocked my account. I didn't have to send no bank statements. I didn't have to send no tax returns. I was able to give them access to the work number. So in closing, not closing, but so essentially if a person is not making over 50,000, but they need to report some type of income, it still benefits them to put themselves on payroll because they have access to the work number and all that. I
can see
data.
how that benefits.
Yeah.
That changes the whole view.
Absolutely.
That definitely, it makes sense because that makes sense.
But see, and
that makes sense.
I'm saying this not to put anybody else down, but bro, my company, everything we do is based on data. We don't guess anything. Like we literally don't guess anything. Everything is based on data.
So I was just teaching a debt class a couple of weeks ago. And one of the things that we were discussing was blocking, because that's the number, what would you call it? The
work number
is with a particular credit bureau.
Right.
Okay? And by blocking it, that means they cannot, that's the form I told you to fill out. They cannot verify your work.
Yep.
Okay? So how do you feel about blocking it versus leaving it unlocked?
Yeah, so it's a very great point. Now, if you do that, what's going to happen is they're not going to unlock your account. And you're going to have to find another method to provide that data to them that they need. So, because you can't just tell them like, oh man, it's blocked. Because they can see it's blocked. So they're going to tell you need to go and unlock it. So when it comes to like specifically what we're talking about with being able to show proof of payment, proof of income, I wouldn't block it. I would just be So if you're gonna lie about how much you make, you need to be cognizant of knowing that.
Say that.
Yeah, because it is what it
he's
is.
forward. He said it's straightforward.
Yeah,
like,
you're gonna lie about that joint. Yeah, yo, if you're gonna lie about that joint,
at least have the income to back it up for real.
at least be able to just know that it's a possibility that joint's gonna come back and bite you in the butt. So when you hear these people talk about no doc loans, they exist. I've gotten hundreds of thousands of dollars in no documentation loan, but it was only one client, or not client, but one bank that asked me for documentation, and they did it in the most sneakiest way. And so if I wasn't prepared, I wouldn't have been able, they would have locked my card. And then I'm still going to have to pay the thousands of dollars that I had spent on that card because I pay my joint off in full every single month.
Absolutely.
So in a situation where we are like doing credit repair, absolutely, you got to freeze that joint. But if it's a situation where we got to provide proof of income
For funding.
don't freeze it because
It has to be unfrozen.
it has to be unfrozen, because if it's not, they're gonna close your account down.
Well, the purpose of it was for something else, and I'll talk to you about that offline because I don't want everybody knowing that particular strategy.
No, it's too good. This is too good. I'm getting
I love it.
information I have not heard before.
Yeah.
Because
It's too good.
It was solidified what I was teaching on
Yep.
in reference to what should you be blocking it for and what you shouldn't be blocking
Yep.
it for. And when we got the information, it wasn't called the work number. It was called something else. And that's why I was like, let me go to it real quick. I'm like, that's the same site. So it also has a different site number as well.
Okay. Yeah, I want to know about it because I
Yeah.
think I know what you're talking about, but I could be wrong.
Yeah, I was just like, this is crazy. And it's all, like you said, it's all data driven.
Yep.
It's all
Everything's
about-
data driven.
And everything is tracking now.
Yep.
So it was like, if you think you're going to be able to do something, if you ain't got your stuff in order, you're not going to be able to do it. And then this is another way of them catching us and catching people, rather not us.
Absolutely.
Not us. Nah, we legit. I promise y'all. All of us legit. Yeah, we legit.
100%. 100%.
That's the whole reason for the beneficial ownership.
Yeah.
Okay.
And I love when y'all talk like that. That's y'all be talking spicy. Oh, y'all be talking spicy.
Well, that's the whole purpose of it, is to track. They want to know who, because even now when I created an LLC, even though I put the trust, it was like denied. We need to know the person behind.
Yep.
Yep.
You just can't put the trust anymore.
Yep.
You just can't put the registered agent.
They got to know who the trustee
They want
is.
a sack of blood. Is what they want.
Yep.
They don't want the entity. They want the person that has blood
Yep.
going through their veins. And even though you may do a particular percentage, they still want that person that's breathing. So it's just interesting because I'm over here like, yes, I'm loving everything that you're saying because you speak in my language.
Yeah, absolutely.
But people don't understand that if all that stuff, there's something that's supposed to happen with no doc loans before the end of the year. They're like not letting us do no doc loans anymore. Are you hearing about that?
Yeah.
Oh, yeah. So she said that they're removing no doc loans. Is that what you were saying
Yeah,
until the end of the year?
Supposed to transpire December 31st, 2024.
December 31st, 2024, they're going to be removing, or something's transpiring with no doc loans.
Are you aware of that?
So I've heard that. But if I'm being transparent, I don't know the validity to it, only because in this space there's so many different things that are talked about but just never come to fruition. Okay. So I've heard that, but we're put a lot of different lenders too, and I can say I've not heard that. We have a call actually. So I've heard that, but I'm really slow to believe stuff unless it's something that comes directly from one of my business partners or someone that we're partnered with that's a lender in this space, right? And so every Tuesday and every Friday we have like a conference almost, right? And we talk about different things when it comes to our partnerships and different things that are trending to happen within the space. And I've not heard anything reported from them from that. And they're actually like they're the ones that literally are lenders. That's why I have so much data, because I have these relationships. Mm-hmm. And so I'm slow to believe stuff until I hear it from that circle of people, because I know that if they're talking about it, then it's something that is like 99% for sure gonna take place. And so I'll say overall the whole credit space, and I don't really like to use the word credit game, funding game. People say it, but it ain't no game to me. You know what I'm saying? And so like, yeah, this is real.
It's not. It's definitely not.
Makes sense. Yeah.
Yeah, it's more on the corporate side.
Yeah.
Anything.
Yeah.
not
Right.
then you are compliant.
Yeah, absolutely.
Okay, so there is a
Yeah.
difference. So how do you feel about the Beneficial Ownership Act potentially? Is it still, because Alabama,
Yeah.
they're saying that it's in reference to their constitutional right. So how do you feel about that?
Yeah, I was going to say I was going to say, the reason why the trust can't own why they're wanting to see, and because I love what you said about a person with blood flowing through them, because a lot of people don't realize it, but our businesses are considered a person as well.
Yeah,
considered a person.
I just looked it up yesterday.
Oh, really? Yeah,
I literally looked it up.
I didn't understand that because a person is an entity.
Oh no, I looked it up because I was doing a call.
Oh, okay.
And I was explaining to them what a person meant,
Okay.
and it means an entity.
Yeah, it's an entity.
A person,
Yep.
artificial person, natural person.
Yep.
Or are you acting?
Yep.
And a lot of
I
people
love how you
ask
explain that.
what they're acting as.
Yeah.
Am I acting as? Your signature is monetized every single day.
Yep.
That piece of that contract is, the banks can't get any money until you walk in the door and you sign the paperwork. So that's why I'm asking you: do you think that the Beneficial Ownership is going to continue?
No.
Yeah, I don't think so.
Yeah, I
either.
don't. Yeah.
Definitely think that that's not going to last
not.
any long. No.
Yeah, and see,
Even the government don't like it.
but that's what I'm saying. And the thing about it too is that, because we've had our businesses before this year, so we have like a year pretty much before we need to have everything registered. So many people ran out and they signed up and they did all that stuff as soon as they were able to. But my clients, I told them, if you already had your business, just wait.
Yeah.
Just wait.
I mean, you're doing something this year. That's a different story.
Right, yeah, you have to, yep.
But if it was done and everybody in our community, I was like, you better go ahead with the IRS, because the IRS shut down. It was crazy.
Yeah.
They had shut down like early for something, and they were like, I can't get my EIN number. And I was
Wow.
like, you didn't know that? It was
Nah.
We were
Yeah, they shut it down for it, like during December, January.
It was like December 27th. It was something.
Yeah, they shut it
Oh,
down.
yeah.
They had like
yeah,
scheduled,
yeah,
the
yeah.
scheduled shut every year or whatever.
So you
I thought you were talking about
couldn't
recent.
go in. No, not recently, but at the end of the year. So you couldn't go in. So everybody was trying to hurry up and get their LLCs.
Yeah.
so
Yep.
they can get their-
For that January 1st period,
It
you know.
Yo.
was- so I think like 6 months maybe.
I agree 100%.
But what it was is all the people that may have been guilty per
Yeah.
se.
Yeah.
Okay.
Yep.
It's a matter of, because the skin folk was not learning the game.
Absolutely.
Like, wait a minute now, it's too many of them, and they getting all this money,
Yep.
and they don't want to work. Well,
Yep.
we're gonna work,
Yep.
and then it
Yep.
falls into, okay,
Yep.
this might have to be another episode. We're gonna let the migrates come in because they're willing to do the jobs, so we can get them to vote for us, because we're gonna give them the money, because these folks over
Yep.
here, they're not gonna want to do those jobs more. But we got to stop them from catching the game.
Yep.
Okay, so we know what they're making, because that's why they're taking away the fiat. Because if we have fiat, they can't track us. But if it's digital, then we can track everything. that
Everything
you're
go.
doing.
Yep. Yep.
And that's really what
Yep.
the real.
Which
that's
that
the
work
real
number,
game.
that
Yep.
work number,
Yeah.
boy, that's crazy.
That's the real game.
That's,
Okay?
I did not know about that work number. That's something. That's something we got to update the course on for real. Is that work number right there?
It's major, bro.
That is
is major.
huge.
Well,
Huge.
You have to block that.
Yeah. Yeah. Yeah.
You have to block that.
Yep.
You definitely
in order
do.
to get it, because you're entitled to it. Remember that. You're entitled to it. So what they're going to do is they're going to check that site to see if you are on that site. And if they see you're on that site, then if they can't see it, then it's
They can
blocked.
verify.
They
Yeah.
can't see it.
Yep. For sure.
So there's more than one way as to why they're using that, not just for for funding. They're using it for other stuff.
Oh,
as
absolutely.
well.
Yep.
But again, there's a level of invasion of privacy.
Yep.
So there's 61 different credit bureaus. It's insane.
Yep.
Or
Yep.
reporting agencies,
Yep.
if anything.
And I'm glad because a lot of times I'll say like bureau, but it has an authoritative legal
Yeah.
connotation to it.
I only say it if I'm speaking to a person that's unaware.
Yeah.
Like
because
to
that's
like
what
if
they
I'm
know.
marketing,
Yeah.
I'm speaking in their language.
Yep, yep.
But I know if we're talking within each other, I'm not saying bureau.
Yeah.
It's definitely a
Dot
reporting.
gov on-
Right. Yeah.
Exactly.
They're not government.
They're companies.
They're entities.
They're businesses.
And so they can resell our data without our permission
Yep. It happens every day.
and monetize it on a consistent basis.
You said that you have conferences
Mm-hmm.
with your with your community, right? Let's say a person wants to have that within their own community, right? So we're big on family business, right? So if someone wanted to build that relationship within their own community, how would someone go about that, building that relationship with like lenders and those things?
Yeah, honestly, the way I was able to do it was through me I was paying into partnerships. And so, and I'll just be transparent, like my business, right? I used to have it set up so that I was the one that, let's say you do a call, I'll get you in on a call, and I would pretty much handle every aspect of like that process from when we started with your business all the way up to getting you to funding. It was just wearing me out. And so I was trying to figure out ways that I could actually hire people to help me out with that. And so I was so fortunate because there was an opportunity for me to buy into a partnership with the company. And I just can't say who. I'll tell you guys off camera, but
for sure.
You probably do. And so I was able to buy into a partnership with them, and they're a huge company. And so now my clients, they get access to their advisors Monday through Friday from 8 a.m. until 7 p.m. And yo, let's say you're one of my clients. You can call these people and be on the phone with them all day long. So it gives a better level of customer service for my clients. It frees me up to be able to do other things in the business. And this client, let's say you buy into my program. Now, if you buy into my program, my advisors are going to reach out to you once a day for the first 5 working days. And the reason that they're doing that is to make sure that you can't say, I haven't talked to anybody. So any questions you have, you can email, call. I just needed more hands to give a better customer experience. And so I was able to, it cost me a lot of money, but I was able to buy into these different partnerships. Now, buying into that partnership and doing an actual in-person meetup led me to make other connections with other people. And so that's the way I was able to link up with them because they saw how knowledgeable I was with things, and they knew that I was doing good business because they look at all your social medias and your record and all these other things. So
people vet. I tell people
absolutely.
Instagram is the new resume.
And you know, one place I can say that I'm a partner with is Nav. So nav.com, I'm a partner with them. The other places I had to do an NDA, so I couldn't openly talk about it. But even with nav.com, they have so much data that you can utilize that it has been helpful too. So it's hard for me to say like what way other people are able to do it, just because of me getting into this situation was almost like just a blessing that fell into my lap. But it was because I paid into other companies several thousands of dollars to be able to have the relationship.
Which goes into you explaining how they can get into what you got going on. So I want you to go ahead and explain how people can get in touch with you so that they can invest into what you got going on so they can get in that community.
Yeah, absolutely. So well, let me say this first. First of all, this has been amazing, man. And I could be here talking to y'all about this all day long. Like this, this is my life. I love it. This is what I do. But what I was gonna say is, and I love what y'all are doing too. I really do. I honestly do. What I was gonna say is that, and I'll send you a video. I could probably even show it to you after this. But there's you actually asked it on another episode, and I was like, man, that was a great question. You asked a guy. You said, have you heard of any AI software out there for business funding? Yeah. And, that's what I have. And I have that. So there's a software that I have, and the software costs a lot of money to be able to build out. The average price for each client that I had historically was $10,000.
That's good.
And this is going to sound crazy. Me spending all that money to buy into these other companies to get this data and to build this software, I did it because I wanted to lower my price point.
That's valid. No, that makes complete sense because we're literally thinking about doing that as well. We're thinking about doing it. It makes complete sense
because you're able to
you're paying it up front, so long term.
Absolutely,
100%.
And I want to be able to impact. I really want to impact millions of people, honestly. And I realized that the best way for me to do it is to give them a lower price that's introductory. And I can do that by removing myself from being so active into the business, because for me, it's just not about making money. I really want to impact people's lives. And so I'm explaining all this to you guys because I really want you to understand that I don't need your money. I promise you, I have businesses outside of social media. I don't have a big following on social media. You haven't seen me on a whole bunch of podcasts. And it's only because I'm just now starting to build my personal brand. But I don't need your money. You may come and do a consultation with me. I'll give you very valuable information. I'm going to help you out. I'll give you an outline of what you need, and I might not even accept you as a client. even if you offer me the money, because I don't need your money. I really am a business owner. I don't just do stuff on social media. And, you know, I just need people to understand that, because I care more about the person than I do about the profit. And, you know, for me, I want to make sure that I help enough people to where whenever there's a thought about business funding, whenever there's a thought about entrepreneurship or how to start and grow a business, and I want people to think about CEO Josh Earl and speak my name to everyone else that they know. And so I bought into this software that it allowed me to cut my clients' payment down into half. And so instead of people paying me $12,000, $10,000, I've been able to drop it down to $7,000 or $5,000. And depending on if they're able to pay it up front, I can even take more money off of that, because again, it's just not about the money for me. I need the money, I take the money, but I don't need the money, I guess is a better way to say it. I want the money, I take the money. But what we do is the software, it takes you through the process of starting a business. So it literally gives you clicks, links to click. It takes you through everything. And like I said, I'll show it to you, but it walks you through everything that you need to do it by yourself. And what it does in the process is it also teaches you what you're doing. And so it takes you to check systems. So it takes you to LexisNexis. It takes you to Dun & Bradstreet. It takes you to all these different places that you need to set your data up properly. And it shows you what you qualify for at the moment, opposed to what you don't qualify for. And so within my software, when you upload all of your information, it'll say, okay, well, apply for this thing because you have, you're going to get approved, right? Almost like NAV, or almost like Credit Karma, where you have it'll show 99% approval odds.
It's because it's like shows you what you're pre-approved for.
Absolutely.
Yeah.
And so, you know, let's say you might want to apply for a specific company, but you will look and see, well, I don't qualify for that right now. And it's not something that people can Google, but I literally have the company's, the data points necessary for you to be able to get into the company. I have the contact information. I have just like everything that you need that you can't Google and find out yourself. And so it's going to show you everything that you need to get into it and to have the approval rates that you want. And so, and this is only through building the credit separate from your social. You know what I'm saying?
I know exactly what you're talking about.
And that's intentional too.
Absolutely.
But you know, we also do where if we get you we do success funding too. So if you have the right credit structure, the credit profile, credit score, and you want to do direct funding, we can get that set up for you too. And you only pay us if we get you the approval. If we don't get you approved, you don't pay us. So just set the consultation up. I'm on Instagram at CEO Josh Earl, trying to funnel people to that one because that's the one I want to grow. I'm also on TikTok, Facebook as well. And I have more followers in those areas, but I want people to go to my Instagram because I really want to blow my Instagram account up. And just shoot me a DM or click the link in my bio, and we're able to get some stuff set up to look at what you have and create a customized roadmap to get you to where you want to go. So you can also DM me the word call, and I'll send you the link as well. So
look, man, y'all heard it here first. Y'all know every person that's on here, I know personally. So think of this as a personal referral. All right.
I appreciate it.
You got to make sure to tap in with my man. As you know, he knows a lot of information. He know more than me, and I know a lot of stuff. Okay. There was a lot of things that I didn't know. There was a lot of things that I didn't know. So y'all got to make sure to tap in. Either make sure you DM him, call, or the link will be in the description below. Yeah. So tap in.